Hello dear students, welcome back to our channel Bhavani Commerce Academy. Today we will see ledger. So what is ledger? When the transactions of a business have been recorded in the journal, the next step is to classify journal entries into account. This classification of journal entries is done in another book is called ledger. Okay, so in the accounting process we have transactions are converted into journal entries. Journal entries are transferred to ledger. So it is a book which is properly arranged, classified of all necessary transactions regarding the working of our business. Okay, it contains the final and permanent record of all the transactions in a duly classified form. Here we have definition. The book which contains a classified and permanent record of all the transactions of a business is called ledger. Here we have some features are there. The ledger contains all accounts. All accounts are nothing but personal account, real account, nominal account. So related to persons, related to assets, related to expenses and losses and incomes and gains, we have number of accounts in a ledger. Here the ledger contains number of accounts. And second one, it is a permanent record of business transactions. So here we have two books we are maintaining in accounting. One is journal, other one is ledger. So ledger is a permanent record of business transactions and it is a book of final entry. It's a book of final entry. All the business transactions are first recorded in the journal and are finally entered in the ledger. So it's a final entry book. And next one, it is a secondary record. So secondary record means as the entries in the ledger are derived from the entries in the journal. So after writing journal entries, that journal entries are transferred to ledger accounts. It's a book of secondary record and it is a book of final entry also. Okay. So here we have format of ledger account. So ledger account is like this. Each ledger account is divided into two parts. Two equal parts. So the left hand side is known as debit and the right hand side is credit. Okay, it's a T-shaped account. See, it is a T-shaped account. Left side debit, right side credit. Okay. As the shown here, each side of account has 4 columns. So debit side 4 columns, credit side 4 columns. What are those 4 columns? Date, particulars, JF, amount column. Likewise, credit side also date, particulars, JF and amount column. Okay. So what we should write under date column? First we need to write year. After that we need to write month and date of the transaction. And in the particulars column, we need to write name of the account. Okay. And JF. JF is nothing but journal folio. What we should write? Page number of journal is referred in the folio column. So జర్నల్ నుంచి మనం తీసుకునే అకౌంట్ నేమ్ ఏ పేజీలో ఉందో అనేది చెక్ చేసుకోవడానికి ఇక్కడ నోట్ చేసుకుంటారు. బట్ వైల్ ప్రిపేరింగ్ లెడ్జర్ అకౌంట్స్ వి విల్ నాట్ రైట్ ఎనీ జర్నల్ ఫోలియో నంబర్. ఓకే, అండ్ హియర్ వీ నీడ్ టు రైట్ అమౌంట్. లైక్ వైజ్ క్రెడిట్ సైడ్ ఆల్సో. సో హియర్ వన్ ఎగ్జాంపుల్ ఆఫ్ లెడ్జర్. Prepare ledger accounts from the following. Here given some transactions. By using this transaction, we need to prepare ledger accounts. Okay. So how to prepare ledger accounts? With the help of journal entries only, we can write ledger accounts. So here we have to know the journal. Then only we will post into ledger. Okay. So here I have given simple technique to write journal entries. So what is that? Here I have given increase, decrease. Yes. If asset increases, that should be debit. If asset decreases, that should be credit. That means in our business, asset increasing means debit, decreasing means credit. Likewise, if expenses losses increasing, that should be debit. If it is decreases in our business, that should be credit. So business point of view only you need to think, because we are following business entity concept. Okay. And if liabilities are increasing in our business, that should be credit. If it is decreasing means debit. Likewise, incomes and gains also. If increases, credit, decreases, debit. So while writing journal entries, just follow this technique. You can write easily. See here, first one, Jan 2nd, furniture purchased for cash, rupees 20,000. In one transaction, we have two aspects. What are those two aspects? here we have furniture as well as cash. So if you have any fixed asset in the transaction, purchase is not an aspect. Okay, so that we are taking furniture and cash. So which one is debit, which one is credit? How to decide? If asset is increasing in our business, that is debit. If asset is decreasing in our business, that is credit. So both are assets only. Furniture and cash, both are assets only. So in our business, furniture is increasing, cash is decreasing. Asset increasing means debit. Which one is increasing? Furniture increasing. So it is debit. And cash is decreasing. So it is credit. So if you purchase any asset, cash is going out. Our cash value decreases. So it is decreases means it is credit. So how to write journal entry? First write down debit aspect. Then you need to write credit aspect. So what is the entry now? Furniture account debit to cash account. See here. Furniture account debit to cash account. Next one. Goods purchased for 16,000. So what are the two aspects here? Purchase and also cash. So goods purchase 16,000. At the time of purchasing goods, cash is going out. So cash is asset. If asset is going out means cash is decreasing in our business. If asset decreasing means it is credit. Cash is credit. Purchase is a expenditure. If you have any expenditure is increasing in our business, that should be debit. So we are purchasing. So expenditure is increasing. So purchase debit, cash credit. So then entry will be purchase account debit to cash account. Okay. And sold goods for 25,000. So what are the two aspects here? Sales and cash. Sale is a income. Cash is a asset. When you are selling goods, you are receiving cash. So asset is increasing. So if asset is increasing means that is debit. So cash is debit. And sale is a income. So incomes increases means credit. Okay. So cash is increasing and sale also increasing. So sale is a credit, cash is a debit. So cash account debit to sales account. Cash account debit to sales account. And next, salary is paid. So when you are paying salary, cash is going out. Our cash value reduces. Asset value reduces. If asset reduces, credit. Cash is credit. And salary is a expenditure. Our expenditure also increasing. We are paying salaries means our expenditure is increasing. So if expenses increases means debit. So salaries account debit to cash account. Salaries account debit to cash account. Goods sold to Arun 2000. When you are selling or purchasing, you are not finding cash in our transaction. When you are finding person name, you are not finding cash, but you are finding person name. So it's a credit transaction. At that time, we need to take a person name as well as sales. Okay, sale is a income. If your income is increasing means credit. And Arun is a person. Receivers account debit, givers account credit according to personal account. So when you are selling goods to Arun, Arun is a receiver or a giver, receiver account debit. So Arun is debit, sale is the income, so it is credit. So Arun account debit to sales account. Clear? So by using this technique also we can write journal entries. Otherwise we need to follow that rules of double entry system. Okay? So actually we need to prepare here ledger accounts. Why we should write journal entries? With the help of journal entries only we are preparing ledger accounts. Okay. So how to prepare ledger accounts? Here see, how many accounts we can prepare here? Here we have different account names are there. So what are the different account names? First we need to check. Furniture, number 1. Cash, number 2. Purchase, 3. Cash already is there. No need to write again. And sales, 4th one. Salaries, 5th one. Arun, 6th one. Sales already repeated. Total 6 ledger accounts you need to prepare here. Let's see. So here we have a format of ledger account. So here we have 6 accounts. So from this first we need to prepare cash account because cash transactions are more. Yes. So I'm preparing here cash account. You need to write account name here. Okay. After that, see in the first entry, cash is credit side. Yes. So in the cash account, It is credit side. So in the cash account credit side, you need to write opposite value. In the cash account credit side, you need to write opposite value. So what we should write? Buy furniture. Furniture account. So that is 20,000. If it is debit side, we need to write 2. Debit side 2, credit side buy. In the cash account, you need to write opposite aspect. What is the opposite aspect? Furniture. So cash is credit aspect. So credit side, you need to write opposite aspect. Okay, 20,000. And coming to second one, here also we have cash. So it is also credit side. So what we should write? Buy purchase. What is the amount? 16,000. Okay. And next, third entry, cash account debit to sales account. So cash is debit aspect here. In above entries, we have cash is credit. So credit side we wrote furniture and purchase. In the third entry, cash is debit. So what we should write? To sales. To sales and debit side. Amount 25,000. Okay. And coming to this, salaries account debit to cash account. Cash is credit side. What we should write? Salaries. In the cash account, we need to write salaries. Where we should write? It is credit side. So in the cash account, you need to write credit side salaries. Buy salaries. In the last transaction, there is no cash. If you have either debits or credit side cash is there, then you have to take into cash account. Otherwise, ignore that. Okay. And while writing this aspect, you need to write date also. What is the first one date? Jan 2nd, 2026. 2026, Jan 2nd. And second one, purchase 5th. Next, sales 15. Jan 15. Okay. And fourth one, salaries 20. Okay. So all the cash transactions are completed. Then you need to close the cash account. How to close the cash account? Just take the totals. 20, 16, 5. So 20,000 plus 16,000, 36,000. 36,000 plus 5,000, how much? 41,000. So credit side we have 41,000. Debit side we have 25,000. So which side is more? Credit is more. So ఎక్కడైతే మనకి ఎక్కువ బ్యాలెన్స్ ఉందో ఆ బ్యాలెన్స్ ని 2 sides పోస్ట్ చేసుకోవాలి. సో దిస్ ఇస్ ద హైయెస్ట్ అమౌంట్. వాట్ ఈస్ ద హైయెస్ట్ అమౌంట్ హియర్? 41,000. రైట్ బోత్ సైడ్స్. ఓకే. ఆఫ్టర్ రైటింగ్ highest amount both sides, then you need to deduct the least amount. So 41,000 minus 25,000. How much? 41,000 minus 25,000. How much? 16,000. That 16,000 you need to write debit side because our balance leftover figure we need to write here. Okay, 16,000. What we should write here? To balance carried on C by D. So here we need to write date also. What date we need to write? We are writing in the month of January. Yes, in the January month, what is the last date? 31st. So Jan 31st. Okay, and this balance you need to carry to next month. So next month, what is the next month? February. So February 1st. What we should write here? By balance brought down. What is the amount here? 16,000. Next one is furniture. Cash account is completed. Yes. And now furniture account. How many times it is repeated furniture? Only one time. Yes. In the first transaction. So what is that? Furniture account debit to cash account. So furniture is debit side. So in the furniture account, you need to write debit side. What we should write? Opposite aspect is cash. In the furniture account, debit side to cash. What is the date? Jan 2nd, 2026. What is the value? 20,000. See here. In the furniture account, we are writing to cash. Two means we need to write debit side. And also furniture account is debit. So in the debit side, we are writing opposite aspect, that is cash. So to cash, what is the amount? 20,000. Okay. So in journal entries, any other entry is there related to furniture? No. So close this. 20,000. Debit side 20,000. Credit side there is no amount. So highest amount writing you are writing both sides is 20,000. Here we have, there is no balance. So this 20,000 only I am writing here. 20,000 by balance carry down. So what is the date? End of the month, Jan 31st. And that will be goes to debit side. To balance. After writing this total column only, you need to write to balance brought down. So carry down value should be above total value. Brought down value should be below total value. Okay. So it is credit side carry down value means you need to write debit side brought down value. In the cash account, we have debit side carry down value and credit side brought down value. Why? Because credit side more value is there. You will get debit side balancing figure. If you have a credit side more value, you'll get balancing figure is credit side. Clear? Then what is the date? After January, we have February 1st. So what is the amount? 20,000. Okay. And next, so cash account is completed, furniture account is completed, purchase account. Here we have purchase account. Here we need to write date, particulars, JF, amount column, credit side also same. Okay. So purchase related entries are only one. So what is that entry? Purchase account debit to cash account. Purchase is debit side. So in the purchase account debit side, what we should write? To cash. To cash. What is the amount? 16,000. What is the date? 5th Jan 2026. So purchase related only one entry is there. There is no more entries related to purchase. So close this. Which side is more? Debit or credit? Debit is more. 16,000. Credit side there is no amount. So 16,000, 16,000. What is our balancing figure? 16,000 only because credit side there is no amount. So by balance carry down. What is the date? End of the month, Jan 31st. Okay. That is brought down value to next month. To balance brought down 16,000. What is the next month? February 1st. Okay. So how to write? Are you observing? See, before total we are writing carry down value. After total we are writing brought down value. Clear? And next one, cash is completed. And next one, salaries account. Salaries account. Related to salaries, how many entries are there? Only one entry is there. Okay, salaries account debit to cash account. Salaries are debit side. That means in the salaries account, debit side, what we should write? To cash. To cash 5,000. 2026 Jan 20. Okay. And no more other transactions related to salaries. So close this 5,000. 5,000. Balancing figure also 5,000 by balance carry down to balance brought down. So 5,000 here also. Here Jan 31st because end of the month and here February 1st. So that is a starting of the month. Starting of the next month. Okay. And next sales account. Sales related entries are we have two. Cash account debit to sales, Arun account debit to sales. Okay, both are related to sales. These two entries you need to post in the sales account. Okay, first one sales account, cash account debit to sales account. Sales is credit side. So in the sales account credit side, what we should write? Cash. By cash. 2026 Jan 15. Okay. So what is the amount? 25,000. And next, one more entry is there. Arun account debit to sales account. So sales is credit side. So in the credit side of the sales account, what we should write? Arun account. By Arun 2,000. Okay. So close this. Which side is more? Obviously credit side because debit side there is no amount. 25 plus 2, 27,000. Here also 27,000. Balancing figure also 27,000. If you have any amount is there, that amount is deducted from the 27,000, you will get balancing figure. But there is no amount means you need to write same amount. To balance carry down. So date here Jan 31st. Then February 1st, buy balance brought down 27,000. Okay, and one more account is left, that is Arun account. While preparing Arun account, Arun is debit side. So debit side of the Arun account, what we should write? 2 sales. Okay, related to Arun, there is no other entries. So close that entry. You'll get balancing figure like this. This is our ledger posting. So if you know journal entries properly, you can post them into ledger. So if you understood, like my video and share to your friends and subscribe my channel. Thank you.